Welcome to The Explainer. Today, we're digging into a really high-stakes battle for the future of bond trading, and it's all centered on one company, MarketAxess.
So if you're looking at this as an investor, this is really the main question you have to ask yourself. It's a classic story, right? You've got a dominant king enjoying years of peace, and then all of a sudden, the castle is under siege. The big question is, will the walls actually hold?
Okay, let's get into it. To really understand the battle that's happening today, we have to go back and see how MarketAxess built this massive kingdom in the first place. And they did it by totally changing the game in the old-school bond market.
You have to picture this. Before the year 2000, if you wanted to buy a corporate bond, you had to physically get on the phone. We're talking multiple calls to different dealers, just trying to hunt down a decent price in what was a super opaque, who-you-know kind of market. Well, MarketAxess just blew that all up. They built one single electronic platform where investors could see competing, transparent prices all at once. It took this messy, fragmented process and made it centralized and way more efficient.
Now, their secret weapon was this platform they called Open Trading. And this wasn't just some small tweak, it was a true all-to-all marketplace. That meant any of their 2,000-plus members could trade with anyone else completely anonymously. This created this just massive single pool of liquidity, which in turn created a powerful network effect. The more people that joined, the more valuable it became for everybody else. That's how you build a classic competitive moat.
But, no kingdom lasts forever. And after years of enjoying that dominance, the story takes a really sharp turn. That powerful moat we just talked about, it is now under a direct and very real attack.
The barbarians, so to speak, are at the gates. And look, we are not talking about a couple of scrappy startups here. We're talking about incredibly sophisticated competitors, led by huge rivals like Tradeweb, a powerhouse in its own right, and the super fast-growing, tech-savvy Trumid. And they aren't just knocking on the door. They are actively breaking in and taking parts of the kingdom.
And this right here, this chart tells the whole story for investors. This is the hard data. In their most important market, U.S. high-grade corporate bonds, you can see their market share has clearly eroded. In just 1 year, that dropped from almost 21% down to 18.4%. That is not a rounding error. That's a trend, and it's the #1 reason the stock has been getting hammered.
So here's the crucial point. For the longest time, betting on MarketAxess was kind of a no-brainer. You were just betting on the whole bond world going digital. That's not enough anymore. The game has changed. Now the company has to actually fight back, and whether or not they succeed comes down entirely to how management responds.
So, how is the king responding to this siege? Well, they're not just sitting on their hands, that's for sure. They've rolled out a really clear 3-part battle plan designed to fight back against these exact threats.
Okay, so let's break down their plan. First up, they're going after block trades. These are the huge, super valuable trades that are often still done the old-fashioned way, over the phone. Second, they're taking the fight directly to their competitors in portfolio trading, which is this booming business of trading whole baskets of bonds at once. And third, they're building an entirely new marketplace just for dealers to trade with each other anonymously. It's a classic strategy, right? Defend your home turf while you aggressively attack on new fronts.
But here's the thing. From our perspective as investors, wars are expensive. So we need to do a serious reality check and see how this battle is actually hitting the company's bottom line.
Okay, so this number you're seeing, this is the smoking gun. It's the fee per million. Basically, it's how much money MarketAxess makes for every $1 million that gets traded on its platform. And you can see it's going down. That means even if they keep the same amount of business, they're making less money on each trade. That is a direct result of this new, intense competition.
So what you end up with is this kind of split personality for the company. On one hand, you've got these major headwinds. Growth is slowing, profit margins are getting squeezed, and fees are declining. But on the other hand, MarketAxess is fighting this war from a fortress of incredible financial strength. We're talking a balance sheet with zero debt, tons of free cash flow, and a history of really high returns on capital. They absolutely have the money to fund this fight.
So what does this all boil down to for you? Well, it's actually a pretty clear-cut decision. This whole situation really comes down to two competing stories, two totally different futures for the bond king. It's the bull case versus the bear case.
All right, on one side, you've got the bull case. This is the turnaround story. It's a bet that management's counterattack is going to work, that they'll stabilize their market share, and that new products will get growth going again. If that happens, the stock proves its quality and probably re-rates a lot higher. Then, on the other side, you've got the bear case.
This is the new normal story. It says this competition is here to stay, market share losses will continue, and MarketAxess is just going to be one of 3 major players from now on. In that world, its valuation has to fall to reflect that new, lower growth reality.
And that leaves us right here, with the final critical question that every single potential investor has to answer for themselves. Is MarketAxess a high-quality compounder? You know, a fantastic business that's just on sale right now and will keep growing value for years? Or is it a value trap? A company whose best days are behind it, just luring you in before it falls even further? The answer to that really depends on one thing: whether the king can defend his crown.